Welcome to another Southbank investment bulletin. I thought I would just kick off and really focus more on what's happening in the UK. So here is a measure of it's the nationwide measure of UK house prices, and the last time it was updated was for August, and the next release will be at the end of this month. And prices are falling at 5% on a year-over-year basis. So back in 2022, they were rising at nearly 15% on a year-over-year basis, and now it's negative. The last time it was this negative was back in 2008. So obviously that is something that is going to weigh on sentiment. If the house you've been living in for so long, you're used to seeing your paper wealth rising, and suddenly it starts going down in value, it doesn't make you feel good. But what I find it does look like we have seen news over the weekend that Rightmove have said that people have started raising the price of their houses by about 0.4%. Now, that's not normally as much as they would normally raise prices at this time of the year, but at least there might be some stability starting to come back into the house market. But what I find especially interesting is that house prices are going down at exactly the same time that rents are moving higher. And there's lots of different ways of measuring uh, the uh, the way that rents are calculated. This one is just focusing on London, and it's now back in the region of the peaks that we saw in 2008 and 2012. So it's gone from basically zero in 2021 to rents rising 5% a year. But then you can look at this another way and look at what are the rents on new houses. And I think this is an interesting one because here we have it going up by 6.5%. And this is the CPI figure. So it's actual rents for housing. So that's really telling us that something is being underreported. But then you have an additional chart, and this one is from a Bloomberg article, and what they're talking about is rents rising by as much as 12%. So what we have is a lot of different data points, all pointing to the same thing, which is rents are rising and property prices are falling. But the problem, of course, is that property prices falling is a result of interest rates, and it's not like there's an additional large quantity of additional supply that's about to hit the market. And that is something that I think is weighing on sentiment. And it's obviously a challenge. But of course, there is eventually going to have to be a building plan. Now, when we think about this entire issue, well, a lot of it has to do with the government bonds. And the gilt yield is at 4.35% right now. Now, it is back in the region of that spike peak that we had a year ago in response to the Truss government's inability to pass a fiscal stimulus, as well as the issues that then subsequently arose in the pension sector, and gilt yields surged. They went from 2% or under 2% to 4 and a bit in the space of only about 10 weeks. And now we're back in the region of that peak. So it's really the do or die moment. We're going to either see the bond yield starting to come back down, which would mean additional demand for bonds, or we're going to see bond yields pushing higher from here. And that would be, I think, a real vote of no confidence in the government's ability to manage its issues. And if we start to see bond yields going up again from here, well, then that is going to be, I think, a clear indication that a recession is knocking on the door. And then, of course, one of the other big contributors to both inflationary pressures as well as the inability of people to afford to live in the country is energy. And oil prices are up another 37 cents today. The price continues to just march higher. And this has very clearly broken the medium-term downtrend. So we've certainly seen quite the recovery in the oil price, and there's no sign yet that it's over. But let's then redenominate that oil price into pounds. And when we think about it in terms of pounds, well, then what we have here is the price that is now firming in from the region of this range that was put in between 2011 and 2014, as well as the peak from back in 2008. And it is, I think, quite likely that given the size of the breakout, even if we have the short-term overbought condition, then there is clearly the potential here that we're going to see it clear the £80 level and potentially go all the way back up and test the £100 level. And that is going to contribute to inflationary pressures. But ultimately, the higher and longer that energy prices go for, then the bigger the impediment that is for economic growth. And higher for longer energy prices are a major inhibition to economic activity, and then subsequently hit demand, which is a deflationary outcome. So we are looking at the potential for deflation to be a more relevant consideration in 2024 than it was over the last couple of years because of the pace of all of that monetary tightening. Now let's just pay attention to what's happening in some of these UK stock markets. The FTSE 100, as both an internationally oriented market, does well when the rest of the world is doing better, the global economy is doing better, and the pound is weaker. And the pound was weaker, so we've seen the FTSE now pop straight back up from the region of the 1,000-day moving average, and it has now broken the sequence of lower rally highs since the beginning of this year. And this is looking certainly like more encouraging data overall. Now, we also saw a rebound in the FTSE 250, but this is much less of an international market and much more focused on the health of the domestic economy. So we've also seen the bounce, but it has not broken the downtrend. It is still holding and has bounced on several occasions now from the 18,000 level, but it has some more work to do if it's going to break this downtrend. And if it can push back above the 20,000 level, then that's going to be a vote of confidence in the recovery of the UK economy. But it has some work to do, so we're not quite there just yet. Now let's also look at the AIM 100, so really smaller companies. And here we've had a really quite prolonged period of underperformance. And the index is hovering here around the 3,500 level. So if it's going to continue to find support, then that level has to hold. And if it can break the sequence of lower rally highs, well, then I think it will be no time at all before it takes out the 200-day moving average and is trading above the 4,000. So we're at a critical juncture here for the small caps because the trend is still very downwards. And there's the potential that if it can hold this support level, well, this might be the bottom. What happens in terms of the bond yield overall and the currency are obviously going to have an impact there. So let's look at the pound versus the dollar. And it has been deteriorating, and this is the primary reason why the FTSE has rebounded, because the pound is now back below 124 and is below the 200-day moving average and has broken the sequence of higher reaction lows. Then when we look at the pound versus the euro, then we also have a clear pattern here of underperformance, but not nearly as marked because the euro is also devaluing against the dollar. And I think that we are in a competitive currency devaluation at present as countries aim to try and supplement their own competitiveness, most particularly against the USA. So we are certainly at an interesting juncture. And I think it is important to just bear in mind that recessions don't last indefinitely, and that when they end, you do get big recoveries. The thing to be most aware of is uh, to identify the risks, ensure that one is adequately positioned so that stops are in place, or at least you know where you're willing to sell at in the event that there is an economic problem, so that you do have the cash available for when bargains are absolutely incontrovertible. And I do suspect that we are going to get to a bargain basement type of stock market environment at some point over the next year. And that is where some really tasty long-term investments will be very cheap. And I think with that, I'll leave you for today, and I'll wish all the best to all of you.